Hey, everybody, welcome. My name is Matthew. Thank you for joining. Just a quick intro to this episode interviewing Alex Gladstein from the Human Rights Foundation. Last month, they announced that myself, Janine from the This Month in Bitcoin Privacy newsletter, as well as Nick Anthony from the Cato Institute, together, us three were awarded a Human Rights Foundation Fellowship, a grant to create a CBDC tracker. And this CBDC tracker will be slightly different than others out there. Of course, being from the Human Rights Foundation, it's going to have a significant emphasis on the developing world and issues surrounding human rights and base money and central bank digital currencies. So this is kind of an addendum of sorts, this episode, to the Q4 update on global base money that I released this past weekend. That was my 19th quarterly update. I've been tracking this stuff for about 5 years now. I do hope that you enjoy the research. You have been enjoying the research. You can find it on my Twitter feed as well on my website, porkopolis.io/base money. In this brief episode with Alex, we discuss a lot of the uneasiness and the tension that exists in the current banking system from the Silvergate and SVB blowups that happened just last week to, of course, all of the important developing human rights situations in my neck of the woods in Eastern Europe, as well as in other continents in Latin America and Africa as well. We talk about CBDCs are very small, very inconsequential right now. But as I mentioned in my quarterly update, they're monopolistic and certainly far-reaching and perhaps Orwellian features that will come with them will be anything but. So I hope you enjoy this quick little addendum to my base money update with Alex Gladstein from the Human Rights Foundation. Thanks. Pretty nuts, by the way, out there where you are.
Yeah, we had the second largest bank failure, I think, in modern history in the United States last night. So, pretty interesting stuff happening in the financial markets. I think Silvergate, there's a lot of theories flying around, but it seems like that was a political attack against them to try and cut off
For sure.
rails for the cryptocurrency industry. And I think this is unrelated. I think that this SVB thing, as far as I can tell, that has a lot more to do with the Fed changing the monetary regime, like really drastically in a pretty short period of time. And yeah, you had all these banks that were forced to actually buy a lot of securities over the last few years. There's a rule where they have to have, like, I guess 15% of their portfolio in what's called HQLA, or like high quality liquid assets, which of course, what does that mean? That means government
Yep.
promises to pay you back later, or mortgage-backed securities. And banks like SVB levered up a ton in that area, um, and those things were only paying, whether it was 2-3% or whatever. They were pretty low interest rate securities, and then now we have this new regime where securities are paying a lot more. So for cash flow purposes, people don't want those anymore. They got less valuable. They made a huge hole in the balance sheet, and then there's really no option. There's no like good option for them, but the best option is sort of sometimes you just got to sell, take the loss, and the loss was really really big. And I think the loss they took on selling bonds over the last month was more than all the money they made in 2021. So people got spooked, and you had a bank run. And an hour ago,
And it was big on the mortgage-backed
yeah, so
bonds
some of
too,
it
wasn't
was
it?
was U.S. government
Mortgage-backed
securities, but
securities,
some
they
of
had a
it was
bunch.
mortgage-backed securities. But they were all like 30 to 40% less valuable than they were when SVB bought them originally, due to the just change in the environment
Yeah.
spurred on by the Fed, and they just didn't plan properly, and they got caught flat-footed, and they went into FDIC receivership an hour ago. So it's done. It's done. There's a bunch of other banks that are not looking good also, but it, I don't know. It remains to be seen what happens. You would think that this is going to force the government to change its policy, but at the same time, inflation remains higher than wage inflation. So, and that's been the case for. I just was looking at the number for. Let's see. We have U.S. average hourly earnings were up 4.6%. It's the 23rd consecutive month where inflation has outpaced the growth in wages. So that's a decline in prosperity for the American worker. And the primary reason why people still think, I mean, the Fed still wants to hike. The Fed still wants to tighten for a lot more, for longer, for, you know, and that's its main priority. I think this was pretty clear in a conversation that Powell had with Senator Warren the other day. He's like, well, you're going to put all these people out of jobs. And he's like, inflation, we gotta bring it down. So, so we'll see what happens there. But stuff's starting to break in the United States. Obviously, in the last, whatever it's been, 24 months, as the Fed has changed its monetary policy, there's been a lot of things that have broken around the world that Americans don't know about. But, dozens of poor and
Yeah.
lower to middle income countries have broken, like their economies have completely broken due to the cost of capital going up, the dollar getting really strong against their local currency. So now Americans are paying attention
Yeah.
because a really large bank collapsed. I mean, this is the second largest bank failure in U.S. history. $209 billion in assets when they failed. So people are. I mean, it was a top 15 bank. So I think member, Fed member, etc. So people are like spooked about this, and we'll see where it goes. But the sad part is they're not spooked about all these other countries that were crushed, by this policy. But I think it's reasonable to expect that this is going to start to slow or even reverse it this year. That's what the markets think. The markets are pricing in a 25% rate cut, like as of December. So,
Yeah.
we'll see. I mean, I don't. This is so obvious to anyone, but politics stands in the way of what central bankers want to do, of course. And that's another way of just saying that people's lives matter, and politicians can't just look at charts and data. Volcker had a very different hand when he played it in the 80s. There's just a lot of different factors now that make this harder for Powell to do for longer. He's not going to be able to, raise interest rates to 10% or whatever. This is not going to. It's not going to work. So there's just too much debt in the system. There wasn't nearly as much debt in the system in the late 70s, early 80s. There just wasn't. I mean, we were levered, but like not like this. Like, and especially when you think about some of these countries, like the average emerging market country maybe had $100 million in debt or something like that in the early 70s, and now they have $100 billion in debt. Like that's a number for Bangladesh. That I'm just throwing out there. But you see a lot of similar exponential escalations of credit extended to these countries. So one thing is the credit market breaking and capital going really expensive when you owe $100 million. Another is when you owe 100 billion, right? So I think it's just very tough out there for a lot of people. But needless to say, for the purposes of what you're doing, I think these are like speed bumps along the way to a long-term regime change, to a more global South looking environment for the West, where you have higher interest rates and high inflation, which is something that people don't understand is actually normal. Like people are like, well, you lower rates and you get, people would expect kind of they think that easy monetary policy requires low interest rates, but that's not the case for most people in the world. Like most people in the world are familiar with monetary policy where they have a devaluation in their currency and high interest rates. And this is something that people are going to learn in the West. It's also possible. It's also possible here. And I think that that's the regime we're shifting towards, probably. I mean, like, this is so clear because the Fed is, what are they going to do? I mean, they can't get, they're going to try to get, their goal is to get inflation to 2%. So it's at whatever, 6 now, and things are breaking. So I think best case for them is they get it down to 4 or 5% or whatever. But even that's like 2 times as much as we've been used to over the last few decades. So um, I think you're going to see this regime change towards an environment where, in what are known as advanced economies, you're going to have higher interest rates and you're going to have weaker currencies. Um, and I think that that's, an environment where there's going to be a lot of stimulus. There's going to be a lot of stimulus, and tools like central bank digital currencies will make it easier to apply the stimulus.
Yeah. I want to segue right into that, but just one more thing on the sort of SVB and just the current climate in banking in the developed U.S. world that we're just talking about as well, which is going to continue to affect the developing world. This is where people can start to see that, like, it's not just on the payer side where it matters where interest rates go. Like, that very much matters. Interest rates
Yeah.
could go up a few percent, and just like it happened with adjustable arms in
Hmm.
2008, your mortgage payment can make everybody go bankrupt. But on the banking side, where these loans are assets for them, they're assets on their books, and they need to receive income from that. When the regular or the rest of the banking system, the cost of capital rises, that makes it extremely difficult for you, and the value of your book, as you mentioned, can fall. I mean, it depends, but depending on the makeup of your assets, I mean, a few percentage point increases can take your asset value down 10, 20, 30% or more. And it seems like something like that has happened with SVB. And so it's a crippling and chilling effect. And it's also, I guess, just one more point on that. It's also kind of ironic because you have the Elizabeth Warrens of the world and people very much cheerleading almost this bank run on Silvergate. And then, I wonder what they're thinking this morning. It's probably not as exciting when you have an unrelated Silicon Valley type large bank now facing receivership and dealing with FDIC, which is insurance that really is not insurance anyway. But
Yeah. Well, I mean, the government will try, but I mean, Silvergate, that's their argument, is that they're trying to paint it that it was too unstable because it was, you know, related to cryptocurrency or something like that. So, no, I mean, the problem is, and it's a little misleading, but I guess the problem is more just with the nature of, like, what is known as fractional reserve banking, even though technically banks don't work like that anymore, and they actually create the money. They don't, like, take money as deposits and then make loans. They make the deposits out of thin air. But this system that we have today has major risks in this area, and those are being exposed right now. Um, so, we'll see. But again, to the point of, I guess, uh, the CBDC stuff, it, you know, it, the system's going to come under a lot of pressure, and I think for government officials, they're going to want new tools to do, like, very specific stimulus, very very specific fiscal in different areas in, short time frames, and they don't have that tool set right now. And a central bank digital currency would allow them to potentially have that tool set where they can kind of have a map of the population and be able to apply monetary stimulus in very specific sectors, or demographies, or God, ethnicities, or whatever they need to do. Now that would require, like, most of the population to actually use these things in a significant way, and that may not happen, as we've discussed. You know, think about using the DMV in America to get your driver's license is a huge pain. Now imagine, like, that sort of bureaucracy running your bank account. That seems like nightmarish. So maybe retail banks are the ones that commercial banks are the ones that kind of interface CBDCs for the public. Maybe there's
Intermediate.
this kind of like option where it's sort of a wholesale thing where the government sells essentially the CBDCs to banks to distribute. But it doesn't matter in the end in terms of it. You still have government officials who are able to freeze a particular CBDC or change the monetary rules on it. I don't know whether they're going to bear interest or not, but all of these things are very interesting. So yeah, it's exciting that you're going to join the team here and create the CBDC Tracker project that we're going to release later this year, and yeah, give the public some information on all these different CBDC projects. So we're really happy to see that.
Thanks. Happy to be on board. I'm going to release I guess it's the 19th quarterly update of the monetary base, global base money, which I've been doing for 18
Yep.
prior quarters. And it's been a busy start to this year. I've been doing a lot more video, daily macro and money commentaries. But yeah, in the meantime, as you mentioned, we had this grant that we applied for, and I'm really glad that our team is working with you guys. So it's good to be on board for that. It's good to apply some of the learnings and the research that I've done here to that project. Do you have any anecdotal evidence of, I mean, Nigeria perhaps is a good case of, that's an interesting one where they tried to roll it out. They tried to make Bitcoin illegal. They tried to roll it out and control it, monopolize it, and people just didn't really want it. And then they loosened up the rules.
Yeah, there's resistance. I mean, Nigeria is the largest country in Africa. It is a Bitcoin and cryptocurrency hotspot. It is also far from the peak of adoption of these assets. Like only about half the country has internet access. So you can imagine what's going to happen when in a
Yeah.
few years when 80% of the country has internet access. I mean, it's really going to move in this direction. People are going to skip having a bank account entirely and just have sort of a crypto wallet. I think that's a pretty obvious
Yeah.
thing that you're seeing in a lot of developing countries. And yeah, the government is trying to fight this. They banned the ability of banks to service people in the cryptocurrency industry. So all those crypto exchanges in Nigeria have pivoted to P2P. It kind of looks the same on your phone in terms of what you do in terms of buying and selling Bitcoin, but on the back end, it's a P2P trade. It's not you're not interfacing with like a centralized entity. Um, Very clever, but it works. Innovation happens in difficult circumstances. The government at the same time is pushing a CBDC, which people are not really that excited about, and they're also trying to get rid of paper cash money. That's also being resisted by regional government actually. So a lot of states are resisting the federal mandate to like discontinue certain high end notes, things like that. There's just a huge struggle right now, and they had a really contested election recently, which was marked by massive amounts of voting, violence, fraud, etc. So we'll see. China's different. I mean, they have a more compliant population in as much as, even though we've seen a lot of protests in China last year, surprisingly, actually, over things like
Yeah.
bank runs and COVID restrictions, um, it's nowhere near the kind of like protests you might see in a country like Nigeria. So the population is just more compliant. They're more repressed, and we're seeing numbers like several hundred million people that are kind of have access to these CBDCs. I have not seen like a systematic report in terms of like, are people actually using
Yeah.
them for retail? Like what percentage of those 300 million plus people who have access are actually using it versus just it sitting as a feature on their wallet that they don't use? We'll find out more. But like clearly the CCP has an ability to like really push stuff more than with other governments. And then you have like major experimentation happening in a lot of other countries. I mean, the Indian government has said that it really wants a retail CBDC in the next year or two. There's a lot of other governments that are feeling similarly.
Yeah.
So we'll see. I mean, you guys will find out. But I mean, again, we're in this, per what you do, looking at that base money. It's kind of like you have this massive increase in base money, and then a pretty relatively small decline over the last year or so, where they've tried to switch gears. And they're not going to be able to unwind the whole thing is the point. Like when you look at that chart, it's just incredible how much base money was created. Now, again, like that's not necessarily tied to bank lending. There are some cases where base money can be
Yeah.
increased a lot, and banks don't want to lend. That will often happen in collapsing economies. You might have the government really try to increase the base, and that not actually expand the economy that much.
In the U.S.'s case, they pay interest. They pay interest on the reserves, so they actually specifically don't lend out the money that we use to bail out their bad assets. So
Exactly, but in countries like Venezuela, you would have in Lebanon, you have these crises where the government tries to print a lot of money to expand the economy, but the currency just hyperinflates and the economy actually
mm-hmm.
shrinks. So there's all kinds of
Sure.
there's no hard and fast rules when it comes to this, but
Yep.
globally, obviously, in real terms, you're seeing an enormous rise in base money due to the stimulus from in response to the lockdowns, followed by the biggest base money stimulus since World War II, right? Like basically, and then since the Fed, um, what was it? It was about a year ago, uh, right, or so. Or when did the Fed pivot? The Fed pivoted at the beginning of 2022, right?
Raising
Technically,
raising the interest rates. Yeah, yeah. Within
yeah. I
the
mean, it was
last
it
year.
was it was jawboned or whatever in around November when the crypto markets crashed. But it actually started happening early 2022.
Yeah.
And in the last year or so, you've had 14 months, you've had interest rates, the cost of capital in the United States, at that very fundamental level, go from what was 0.3% all the way up to close to 5% or
5.
whatever on certain
Yeah.
securities.
And the dollar got a lot stronger. That
Yeah,
also
and
affects this
well,
chart.
right. So all these other, you have the milkshake thing, the milkshake
Yeah.
dollar milkshake theory, which is true. Which in this time, in this era, the dollar is the least bad option. So people flock to the dollar.
Best looking horse in the glue factory. I like
Yeah,
that
in
one.
the land of the blind, the one-eyed man is king, right? So
Exactly.
the
Exactly.
the dollar is what you want if you can get it. A lot of countries can't get it; they're screwed.
Yeah.
Other countries, even though it's the best, like from a short-term financial perspective, they don't want it either. Like the Chinese and Japanese are sitting on $1 trillion each of treasuries, and they're not feeling that great about that. Of course, like on the one hand, what else would they rather have? I guess is the idea. But on the
Yeah.
other hand, they really want to diversify because they don't want to be caught flat-footed if the U.S. decides, in the China's case, to freeze some of that, or in the Japanese case, if the U.S. it starts to really deteriorate. So you have a regime change that's going down here, and I don't think that there's two things that could happen here, I guess. I do think that the uh, actual units of base money will expand over the coming. Like I think we're going to be in an inflationary decade from that perspective, from like a monetary supply of base money. However, I don't know if the real value is going to expand. Like we might go through a global deflation in terms of real value, like it's possible, like over the next few decades. Like I've seen people model stuff where we basically go back to the 1990s. This is all tied to oil and energy markets and fossil fuel subsidy that we've been living in since for the last 50 years, basically starting to erode. Um, Fossil fuels give us such an amazing subsidy for our civilization, and our ability to extract them from the Earth's crust is just declining. It's sort of running out, like what we can have. And of course, we have these other energy sources, but they're just nowhere near as efficient as fossil fuels. So I've seen some models that say that maybe in the next 30 years, we basically this it's like a top, it's like a bubble in terms of global GDP in real terms, and basically it settles back at like where we were in the 90s or something like that. That's one model I've seen. I mean, of course, there's other models, but I think generally speaking, my sense is that we're going to go through a era of this decade of monetary expansion, but not necessarily real value expansion. Does that make sense?
Yeah. And it's one of the things that I'm looking forward to with this project is to really put a human face, talk about human dignity. It's happening all over Eastern Europe, even this week. In Georgia and in Israel, there's just protests happening all the time now because of potential legislative changes. And the Ukraine war obviously has been going on for a year. It's very important to us in here in Eastern Europe, but well beyond our neighborhoods and geography. I mean, this stuff truly is worldwide, and they're trying to take it worldwide now, where you can, like you said, you can just easily, with the push of a button, pump out some stimulus, helicopter money, just let the people get what they want, that little sort of morphine drip. And so it's really going to be important to see how this stuff affects the real economy, specifically in the developing world. I also think one more thing I was thinking about when you were talking about, China, Nigeria, and these different, Latin American countries, as well, is you're going to have this mixture. The dollar might be last to the game there because of all the other potential theoretical benefits it has, like we talked about. But you have countries like Norway and Sweden, very rich countries, socialist in many ways too. Norway also has a huge, $1 trillion plus balance sitting on the balance sheet of the central bank. That is their pension reserve, primarily based in fossil fuels. And it's interesting that they as well are going to try to push this narrative of, I think they're going to come pretty soon, as far as, they've already been pushing cashless societies for 15 plus years in the credit card manner. And now for sort of anybody, rich or poor, well-to-do or not, in their societies, I think it's something that they can see as a noble goal, that they can make this happen, and they're really going to help the environment and this and that. So you're going to see it just coming from all sides, from rich countries, poor countries, developing, not. And it's really going to be interesting to see. It's like India a couple of years ago. I don't know if you remember, I think it was December of 2016. I charted this a while back, also when talking about CBDCs. They actually tried to redenominate and take a lot of physical cash out of society. Do you remember that? They took out.
Yes.
I can't remember the notes. It was like the 50 and the 200 note or something like that. And they wanted to put some more counterproof protections on the notes. But they also said, as part of this, is they want to encourage digitization, and they want to stifle the black market. And physical currency supply, they just crushed it for like 3 months. And then now, if you look at that same money supply, same physical currency supply, it's like 3x higher. So there is also an addiction to physical cash, which is something that's also going to play into this effect. And, physical cash can be abused as well by the central bank. And, we can have memories of Weimar and many other places with hyperinflation. So there's no easy answer there. But at least we can track this and try to see what's the best way forward for less developed countries. So with that, you got to run this morning. So anyway, just wanted to say I'm glad to be on board, glad to join the Human Rights Foundation in this noble cause.
Yeah, it should be fun.
Yeah, we'll review this, I'm sure, more often than not, every quarter. Let's see what happens.